to another webisode of White Collar Wednesdays. Adriana Collada Hudak here, Senior Counsel for Greenspoon Martyrs White Collar and Criminal Defense Practice. And today I have a phenomenal guest joining me for a brief chat on taxes and crime and how all of that layers together. I am happy to introduce my wonderful colleague, Nick Richards. He is the chair of our tax and cannabis regulatory practice here at Greenspoon. And today we're going to chat a little bit about how all these practices come together and what happens when the tax man comes a-calling and you are looking at possible federal charges for either fraud, evasion, or all that other good stuff. So Nick, welcome, and tell us a little bit about your background. I understand you spent some time with the most hated of all federal agencies, the IRS.
Yeah, Adriana, good morning. Happy Wednesday. I was that guy for a while, the man come a-calling. I'm a lot more popular at parties now that I'm not that guy anymore. I gotta say, things have gotten a little bit better in my social life. But it was a great experience. I actually really enjoyed working for the federal government. While working as a trial attorney for the IRS, I also served for a little while as a fraud advisor for the fraud technical group and worked on a number of different sort of abusive scheme type cases involving, when I was in the IRS, was right about 2000 to 2010 or so, when there was a lot of tax shelter going on, and I worked on a lot of those. Some of those turned criminal. Some of them in the IRS, there's two levels of criminal penalties out there. There's a couple different levels. There's sort of a negligence penalty, then there's civil fraud, then there's criminal fraud. The difference is dollars until you get to criminal fraud, and then it's jail time, of course. But yeah, I'm glad to have made it out of the IRS, and but glad I was there too.
So while you were investigating the types of different offenses that you came across over there, what was the most common type of, let's say, criminal tax scheme that would come across your lap?
So the IRS likes to look, they have to prove intent. And in the tax world, you sort of look for some sort of structuring, some sort of activity on the part of the taxpayer to represent that intent. So for example, form a company to hide money, do things like that. And so, I think that the common piece of a lot of these cases was this structure of a company, a trust, maybe a couple companies in a different trust that was sort of used as this vehicle to change a taxpayer's sort of relationship with their income. And, oftentimes that involved an individual that was telling the taxpayer, hey, look what I can do for you. I think those kind of fall into a couple of different categories. Sort of, some of them are just too good to be true, and people need to sort of, stop drinking the punch and realize that, you can't just magically make things go away. It doesn't really work like that. There's some things you could do, but I think most people know, and wait a minute, is that simple tax planning, or is that something more? And then there's this sort of, Adriana, I think you called it the traps for the unwary, right? You get yourself into a situation, and it's a very tight rope you have to walk to stay compliant with this sort of structure that you've been sold, and you don't realize that, and you end up doing some things that sort of blow it for you.
I noticed in the criminal practice as well, you kind of have this same dynamic, and a lot of even my clients, people who get caught into let's say get rich quick schemes, or hey, let's do this business this way, it's all great, it's all good, and people get very easily caught up in the too good to be true rush, and before you know it, you find yourself doing things that are outside the law. And just because you didn't know it was illegal doesn't mean that you are innocent of criminal wrongdoing. But with that being said, you mentioned something that I wanted to get into a little bit with you, which is you are, let's say, your typical innocent taxpayer, you're trying to do the right thing, but at the same time, you also don't want to be paying more taxes that you need to pay, and you want to take the advantage of your loopholes and everything that the law allows. But how can you, as an individual, avoid falling prey into these tax frauds or schemes that then wrap you into a possible criminal or even just a fiscal investigation?
Yeah, well, so first off, seek professional advice, right? I get a lot of calls from clients that are approached by promoters, and look, is this legit, Nick? What do you think about this? It doesn't have to be an attorney. It can be a CPA as well. Most, CPAs and tax attorneys out there have a pretty good gut call on these things and whether or not they are legit. And when I say legit, there could be some things that just don't work, but are not criminal. And then there can be things that are criminal. And criminal is a little bit different than, say, a sort of a technical transaction that has a chance of success and sort of makes some sense. There's some gray areas and that kind of stuff. Generally, that's not really a criminal situation. With a criminal tax crime, what you have is, evasion of tax, right? Some non-reporting of income in some way that is substantial and is intentional and is done with the knowledge that in doing that, you're really underrepresenting what your tax should be. And so it's higher than those sort of, technical shelter problems, kind of gray area things like that, usually.
So what type of red flag, for example, will trigger the IRS to take a closer look at a return or at the classification of, let's say, a trust, an asset, a corporation? What will trigger an agent to say, wait a minute, that really doesn't look right?
Well, so it's one thing for an agent to be actually looking at a tax return and actually seeing something and saying, now, wait a minute, what's that large adjustment there? Here's this big income item, and suddenly that all goes away. What is that? Let's dig into that. That certainly is a sort of an individual level red flag. But as far as like red flags go, when the IRS is looking for matters, they tend to look for things that they can trace easily. So for example, a lot of times what happens is that the same individuals are promoting the same bad schemes. Those individuals oftentimes have licenses with the IRS called a CAF number, a CAF number, and the IRS can track that CAF number. And so if you have an individual out there that's promoting and filing returns that the IRS believes are not proper, the IRS can find every return that individual has filed and put them all under audit. That was what we did in the abusive tax world when I was at the IRS. And then, they can also track some things. Sometimes they can look for example, say you're a taxpayer with $500,000, wouldn't that be nice, of annual income, and then and you're always right in that, and then the next year you have $35,000 in income. Well, that's a little unusual. The IRS has a memory and they can track that kind of stuff too. That might cause you to get an audit of some sort. There can be some components. For example, there are various foreign accounts that we have specific filings that are required. Those foreign accounts can be used. The IRS has the ability to search for, say, various factors like a specific particular form filing, like a foreign account form, and another kind of filing that might be linked together to show something that's going on. So they definitely have the powers to look deeper. And then one tool that they have is called a John Doe summons, where they can actually seek information. Say there's a bank that's helping people not report income. They can go to that bank and issue a John Doe summons and find out all the people that the bank is not reporting income for. So they have serious powers to seek information.
Nick, and the IRS, I mean, unlike your typical, criminal statutes or criminal penalties, the IRS has a very long arm in the sense that they can go back years upon years. There is no statute of limitations on tax evasion offenses. Is that correct?
Yeah, that's correct. So for criminal fraud, no statute of limitations on that. Then go back to the beginning of time. There are a couple dates that you generally think about in the world of taxes. 3 years is the general audit for civil matter. So once you file your tax returns, the IRS, so long as it doesn't rise up to a higher level, IRS has 3 years to audit it and make an adjustment. If it is a substantial understatement or a civil fraud, they have 6 years. And then criminal fraud, no limitation there.
They got forever.
Yeah.
So there really is no hiding from the tax man. It's kind of just a matter of when and not necessarily the if. Is that right?
I think so. I mean, practically, boy, how far back do they go, right? It's hard to put the pieces of the puzzle together that far back. So you don't see a lot of really, really old cases, but yeah, it's possible.
And now typically, if someone is going to be subject to any kind of, let's say, civil, or let's start with the civil, since that really does concern probably the majority of people, thankfully. What is typically the investigative timeline on let's say, a civil fraud issue with the IRS? In other words, will they, I mean, I understand that it's, and I should have probably prefaced it with this. I know that as an agency, the IRS tends to be quite backlogged and quite busy. So in other words, how long do you have to really look over your shoulder in that regard?
It's hard to say. An investigation can start, and it can start as a civil exam, and it can tick along a civil exam course, and then which would be a 3-year window, and then they can think, well, wait a minute, this is a fraud case, and now they're maybe looking at that 6-year civil fraud window. But then if it becomes a criminal fraud case, it could be as long as it takes them to decide what to do with it. So it could go on for years.
Gotcha. And let's say that you do have the tax man knocking on your door, so to speak. What is the best way for someone to defend or prepare?
Don't let him in.
Exactly. Besides calling us, besides calling Nick, and then if it turns criminal, fate forbid, then I have to get involved and things get really ugly. But besides that, what is the best way that you can prepare for such an occurrence?
Well, you need an attorney, 100% if that happens. They're not there to, be your friend. They're there to gather the information that they need to prove that you did something wrong. So they're not your friend. They are trained professionals that are seeking information. Oftentimes, they will be talking to your neighbors, talking to your spouse, talking to your business associates, doing all those things, and talking to your return preparer as well. It's really important to know that you do not have attorney-client privilege. You do not have privilege at all with your return preparer, your CPA. The only person you have privilege with, because you have marital privileges, but is your attorney. And so be really careful, CPAs and taxpayers. If there is a criminal situation that arises, you need to stop that conversation and get an attorney involved now, because you need to protect, you need the protections of the attorney-client privilege.
Oh, absolutely. From the get-go, again, whether it's a tax investigation, whether it's going to be a criminal investigation, the first thing that I tell just about anyone is, if any kind of law enforcement or government agency comes and is asking you questions, the first thing you need to do is obviously try to find out what it is that they are asking about, because again, it could be something completely innocent. But if it's anything having to do with, if you even suspect that it might be something having to do with your actions or conduct, the first thing you need to do is, number one, very politely and very professionally, officer or agent, please let me have your card. I am, let me speak to my attorney first, and that person will be in contact with you. And always let them know that you have representation, or you're going to get representation, and that you don't want to speak without that. Because even your most seemingly innocuous, innocent statements can open you up to further scrutiny or get you in trouble in ways that you really can't foresee. So
and I would say that is absolutely true in the criminal context, and it may very well be true in the civil context as well.
Oh yeah.
I don't know how many cases I've gotten involved in after the taxpayer has tried to do it themselves for a while, and realize that they've done some things that have put them into a position where that now they're sort of stuck in a way that if they just didn't say that they wouldn't be stuck in that way. And taxes are complex, and it's hard to fix them. And again, IRS is not, for the most part, they're not interested in helping you fix them. They're interested in helping find out what you did wrong.
Yeah, and they're interested in collecting. That's their job. And I'm going to take a little bit of a turn here, because one of the things that you are also very involved in, especially here in our Denver office, is cannabis regulatory practice and issues. And tax and cannabis, and the cannabis industry rather, have a very fraught relationship right now. So is there generally some kind of advice or tips that you can give to people in the cannabis industry as to things that they need to watch out for regarding taxes?
Well, so everybody in the cannabis industry is upset about a code section called 280E. And 280E makes it so that cannabis companies can't deduct their costs. So it really drives up income for tax purposes, but not for real, because you still have those costs.
Right.
So it's a real pain, and it puts cannabis companies in really high tax brackets, 70, 80%. And so here's what I would say. There are some ways in which that 280E problem can be controlled and maybe even reduced some, but it can't be eliminated. And anyone who's telling you that it can be eliminated, you should look at that closely, particularly if it is being done through some kind of other thing. Like, for example, there's folks out there that are promoting management companies as a way to get around 280E. That's a disaster for companies right now. And there are other things like that. There is a credit that's available at our territories, and there's folks out there trying to get cannabis companies to claim that they are located in Puerto Rico, for example, so they get this credit. How can a cannabis company that's licensed to sell cannabis in the state of Colorado be located in Puerto Rico? They don't.
Yeah, sounds like
they can't do business there, right?
No, and it sounds, and that personally sounds to me like just outright fraud, and that's going to be another conversation. So what I'd love to do is, Nick, I'm going to have you back, because I really think that our listeners would love to hear more about the intersection between the cannabis industry, the criminal industry, and the tax industry. And this is definitely a conversation that deserves a lot more time and attention. But thank you so much for joining me. Yeah. And for any of our clients who want more information or have questions for either Nick or myself, you can find us here at our Green Spoon Martyr website. You can reach us via our emails or phone numbers. And we look forward to seeing you on the next webisode of White Collar Wednesdays.